Here's one thing though that the analysts do that I love. Sometimes what they'll do is they will downgrade stocks that I love, stocks that I own or stocks that I want to buy. And oftentimes when they downgrade, they'll say, hey, it's overvalued. I'm going to set a lower price target on it. It's only worth this much. Hey, it's no longer a hold. I'm going to mark it as a sell. Wall Street places a lot of value on these analysts. Mutual funds make decisions based on these analysts, and oftentimes when the analyst says something like that, the stock will literally go down overnight. The stock will correct, and that creates a buying opportunity for long-term investors for dividends and cash flow like myself. Hey everyone, this is Ian and I am back with another video about dividend growth investing. Today I am in beautiful San Francisco, California. I am in between meetings, so I thought it would be fun to film a quick video about dividend growth investing right here from this park. So I want to answer one of your questions today. This is a subscriber question. This is a question that I just received recently, and it is about stock analysts. So I want to answer that question. The person was asking me, hey Ian, what do you think about stock analysts? How do they influence your own investing? Do you pay attention to them? Are they important to you? Who are these people to begin with that it seems whenever they say something, stocks go up or down? Who are these analysts? So let's just start with some definitions. There are two types of analysts. There are buy-side analysts and sell-side analysts. A buy-side analyst, this is someone who works at an investment firm, a large investment firm, and they are making analysis, and they are doing this because the mutual fund managers at that firm need good analysis to make decisions. They are trying to decide which stocks to buy in the mutual funds. They are trying to decide which stocks make the most sense in the mutual fund portfolios, and so they are doing buy-side analysis. Typically, the analysis of a buy-side analyst, in my opinion, is going to be more trustworthy and better than a sell-side analyst, but that is just my personal opinion. The other type of analyst is the sell-side analyst. What is a sell-side analyst? A sell-side analyst is someone who is trying to produce analysis and reports on stocks to try and acquire more business for a firm. So if a certain firm wants to get more clients, maybe their trading desk wants more clients, these sell-side analysts are providing reports, research, information as marketing collateral. They are trying to use analysis to build their business. Obviously, that's why sell-side analysis, in my opinion, isn't as valuable or as reliable as buy-side, because the buy-side analyst is actually using the analysis to make stock purchases. Now, what these analysts typically do is they put price targets on stocks, they rate stocks, are they a buy, a hold, a sell? They try to forecast what's the revenue going to be, the earnings, the margins, all that kind of stuff. And how do they do this? A lot of them do research. They actually go to the customers of the stocks, they talk to business partners, they talk to people who actually work with these companies, and they do bottoms-up research. Some of them do tops-down research. They just look at the overall market, the economy, they run their models, and they come up with numbers. Overall, what I have found is these analysts, they're looking at more short-term things. They're looking, what's the company going to make this year, next year? What are they going to make this quarter? Is it a buy now? Is it a sell? Is it a hold? They're looking at the short term. I'm a dividend growth investor. I invest for dividends and cash flow. I am looking 10, 20, or even 30 years out. I'm building a massive snowball of passive income and cash flow. Because of my strategy, it just does not overlap with the analyst way of doing things. Analysts are looking at the short term, and by short term, I mean the next quarter, the next year, or even the next 5 years. All of that is the short term to me, whereas I'm looking at a minimum 10 years out when I do my own analysis. So I personally don't look at these analyst reports. Well, sometimes I do, and look, sometimes the information is helpful, but what I'm trying to say is I don't weight them in my purchase decisions. I do my own analysis because my analysis is looking at the long term. It's very different being a dividend growth investor versus a trader. And I think the analyst way of doing things, it's more helpful for the trading and more of the short-term philosophy. So that's why I don't pay a lot of attention to what the analysts are saying. Here's one thing, though, that the analysts do that I love. Sometimes what they'll do is they will downgrade stocks that I love, stocks that I own or stocks that I want to buy. And oftentimes when they downgrade, they'll say, hey, it's overvalued. I'm going to set a lower price target on it. It's only worth this much. Hey, it's no longer a hold. I'm going to mark it as a sell. Wall Street places a lot of value on these analysts. Mutual funds make decisions based on these analysts. And oftentimes when the analyst says something like that, the stock will literally go down overnight. The stock will correct, and that creates a buying opportunity for long-term investors for dividends and cash flow like myself. And so I love that about analysts. I love that they can create that volatility sometimes. I don't take what they are saying too seriously. Although look, I have to remain humble. I can't completely disregard these people who do this for a living. Certainly, if they have something like that to say, I'm going to pay attention to make sure there's not a fault in my own long-term vision. But that being said, if they mark a stock as a sell that I still loved, after all of my own analysis, I look at that as a buying opportunity. As a closing point here, one thing I want to mention that I love about analysts is they're really looking at the short term, whereas I'm looking at the long term. And so again, all companies go through cycles. Even non-cyclical companies, I'm talking about all companies. When you hold a company for 30 years, it's very, very rare that a company will see an upward trend every single year. But, well, maybe there are some companies, but most of them do not do that. However, an analyst, whenever a company starts running into trouble, typically they will start reporting on that trouble. They'll make everyone aware of it, and it can almost amplify the correction, and so creates a buying opportunity, like I just said. But what's really fundamental and important here as a dividend growth investor is to always remember, hey, I'm about the long term. I'm about decades out. What I am doing is so different. It is so completely different than what most people are doing. It is so unfathomable almost for the way analysts in Wall Street and mutual funds look at companies that I'm in a league of my own. I'm doing something that is so just different and cool. And that's just something always to remember, is don't let these analysts necessarily throw you off track. Don't let them make you think that the short term is the long term. Don't make them alter your strategy and your way of looking at things, because your way of looking at things or my way of looking at things may be just so completely different than the way analysts look at things, because a dividend growth investor is a completely different type of investor, and it's something that just is so different than what Wall Street is used to. So my name is Ian Lopuck, PPC Ian, just a fun video today in response to one of your questions. Thank you so much for these amazing questions here on my channel. I truly, truly value them. They fuel the content. And just to summarize, there are two types of analysts, buy side and sell side. Typically, I don't place too much weight on analysts because they are looking at the short term. But what I do like about analysts is they can create some great buying opportunities when they downgrade a stock that I love. Obviously, I don't want to get too serious about just completely disregarding what they have to say. I want to value all sources of information, but I just have to remember that they are typically looking at the short term when I am looking at the very long term, multiple decades of time for this dividend growth investor. If you enjoyed the video today, I please invite you to give me a thumbs up, a like, a subscription. All of that means the world to me. And thank you to whoever asked that question. I thought it was a really good question. And just before I go today, just a friendly disclaimer. I am not a licensed financial advisor. Today's video is not financial advice. This video is just for your fun and entertainment. If you are going to go out and invest money in the stock market or anywhere else, please do consult a licensed financial advisor first. Broadcasting here from beautiful San Francisco, California, I will see all of you in the next PPC Ian Dividend Investing video.